Shifting focus to the broader African market. Now, Kenya has escaped President Trump's tariff wrath. The East African nation has not been impacted by the latest round of reciprocal tariff hikes. The country will remain subject to a 10% U.S. import tax. And while this is good news for its economy, growing inflation threatens some of its economic gains. Phumelele Mbiyo, senior macroeconomist at Absa CIB, joins us with his analysis of the Kenyan economy amidst President Trump's shifting tariffs landscape. Phumelele, thanks so much for your time this afternoon. So the East African nation having to only stomach that baseline tariff of 10%. While it's low, there'll still be some pain, right? Walk me through the impact this could have on the economy.
It's probably not going to be that significant overall. Like you said, 10% is quite low relative to other countries that are exposed to the U.S. economy that have been impacted by these tariffs. If you look at the Kenyan economy, the total value of exports that goes to the U.S. Ranges somewhere between 8 and maybe 12% of total exports. So it is it's small, it's not that big. However, most of those exports are textiles, clothing and textiles, and that sector is likely to be significantly impacted. However, you have to bear that, or you have to at least juxtapose that 10% tariffs against the tariffs that are imposed on other countries that export textiles and clothing to the U.S. that are facing much higher tariffs than Kenya. So overall, the impact doesn't seem to be that doesn't seem like it's going to be that impactful.
And with that slight competitive edge, I guess, as it's dealt a lower blow with those 10% tariffs compared to other countries, does this open the opportunity to perhaps explore trading even further with the U.S.?
Yes, for sure. I mean, I think the tariffs themselves will not necessarily impact trade, or the fact that other countries are facing higher tariffs is not going to impact trade necessarily. I mean, if you look at most of the biggest export items that Kenya has, it's largely things like flowers, horticultural products, tea and coffee. And they, when it comes to manufactured products, they mostly trade those within the East African region. It's possible that manufacturers or businesses in some of those sectors might look to expand their relationships with the U.S., but I don't think that the fact that countries in East Asia, for example, are facing higher tariffs than Kenya, that is necessarily going to be a spur for those businesses to look for opportunities. I think what is going to be most likely a spur for trade in Kenya is going to be the expansion of the Africa Continental Free Trade Agreement, and perhaps looking for opportunities within a broader East Africa region.
All right, let's look at some domestic issues, right? It's not all smooth sailing when looking at Kenya's economy, with domestic issues including rising inflation, which then could, affect central banks' decisions moving forward. Take me through some of the factors that are fueling the acceleration in consumer prices.
It's quite muted, actually. The inflation pressures are quite muted, I would say. Most of the pressure that we've seen on headline inflation has come from food.
Yes.
Food prices have risen quite, or at least food inflation has risen quite sharply. But even there, you are seeing that the momentum on a month-on-month basis is actually starting to slow down. Outside of food, there hasn't been any evidence of rising inflation pressures. Fuel prices have been, for the most part, have been stable and even decreasing in some months. If you look at the transport index, it hasn't been adding significantly to inflation. If you look at the housing subcomponent of the CPI, which incorporates electricity tariffs and things like that, that also has not been exerting any meaningful pressure on inflation. So it's been largely food inflation that has been exerting significant pressure on inflation. Overall, inflation is still quite low. It's still a bit lower than the 5% midpoint of the target range. It's I think about 4.1% currently. Our expectation is that it might rise over the course of the second half of this year, maybe get to 5% by the fourth quarter of this year. But in all likelihood, it will trend broadly sideways, and that still leaves room for the central bank to ease the monetary policy stance as a consequence of that.
So would you say then the risks to inflation are balanced? I'm also thinking of weather conditions, climate change conditions that could also then impact the agri-sector, and that also playing out into food price inflation.
If we take the forecasts that have been provided by meteorologists, they indicate that there's going to be what they refer to as ENSO neutral conditions, between now and at least October. In that scenario, then there is not likely to be that much significant upward pressure on inflation. Beyond October, of course, we don't know what the weather is going to be like.
Yeah.
So the weather remains a significant risk, of course, going forward beyond that. But as things stand right now, there is no evidence that there are any imbalances in the economy that would lead to pressure on inflation. If you look at the exchange rate has been stable for quite a long time now. Indications of domestic economic activity are that domestic activity is starting to pick up now,
yes,
which means that import demand is not particularly strong either. So overall, the outlook for inflation is still very favorable in our view, and we think that that leaves scope, as I said, for the central bank to continue to ease the monetary policy stance. If there's any sort of meaningful upside pressure on inflation, it would most probably have to emanate from a drought condition, or if the currency were for some reason to depreciate significantly from here. But there is no reason at this point to think that any of those scenarios are going to play out.
And just on that, right, on the consumer prices, has that started filtering through the rate cuts, the inflation, lower inflation, has that started filtering through to the citizen on the ground? I mean, we do know that there's been a few, or rather bout of civil unrest over the past few years in Kenya, with one of the factors or something that Kenyans have been protesting about being the rising cost of living.
Yes, rising cost of living, as well as inadequate growth in household incomes, let me put it that way, or in real terms, in some cases, even reductions in real household incomes. That, I think, is still a problem at this stage. Overall GDP growth is still quite strong. We're talking GDP growth in the region of 5%. Maybe it was 4.7% last year. We were expecting it to be 4.7% for this year as well, and likely increasing closer to 5% over the next 2 years. That is still quite robust GDP growth. The problem, I think, is that when it comes to household incomes are not growing as fast. And indeed, there are indications that in some instances you actually have household incomes declining, and that is part of the reason why there is such displeasure. Of course, there are other issues. There are political issues, complaints about the government and its handling of spending and misappropriation of funds and things like that. But when it comes to household income growth, I think there is a problem there. But overall GDP growth is still quite elevated, as I said, in the region of 5%, and likely to remain so for quite some time.
All right, let's leave it there. Phumelele, thanks so much for your time this afternoon. Now, that was Phumelele Mbiyo, Senior Macroeconomist at Absa CIB.